Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 43rd report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. As you may see, we've got this Swiss franc on top of our list with a 17% change in commercials positions. You can see that change over here. Since this is a currency, 17% change can be definitely considered a large number. You may see on the chart that it is pretty large, although we have seen even greater changes in the past 52 weeks. It's definitely amongst the top 5 changes. It is a bullish COT change signal coming after prices are dynamically falling. So this may actually be a good signal for us for the near term. Possible correction can happen early next week. Jumping to the 5 years chart, you can see the extreme that is becoming more bullish. You may see that possibly this back over here at the end of 2017 was the most bullish extreme in the past 5 years, and of course bearish extremes are pretty far away. So not only do we have a bullish COT change signal, but from the COT extreme perspective, we can also say that the picture is becoming more green, let's say. Our next market is the Japanese yen. We have a 14% change over there. You may see this change being larger than average, but not that unusual. Again, this is a bullish COT change signal coming when prices are a little bit lower than we've seen in the past couple of weeks. So this may actually be a good signal for us. And again, jumping to the 5 years chart, here we go. You can see that similarly to the Swiss franc, we're definitely closer to bullish extreme levels. So we may have to be prepared for a turn and see higher prices in the medium to long term. Our next market is cocoa with a 14% change over there. In this case, we're talking about a bearish COT change signal. You can see that change over here. Basically, commercials have now gone below the zero line, meaning they're net short again. They were net short back in roughly in March this year. So this is a bearish COT change signal. We can expect from that prices to drop a little bit. Of course, never forget that COT change signals are maybe not as effective as COT extreme signals, but nevertheless they should be taken into consideration. You may see that we're still closer to bullish extremes. This was back over here when we had this pretty decent large bullish extreme in the market, and you can see prices have actually gone higher. Now you may ask, is this the time to start exiting your long positions or going short? You have to look at the chart, and you may see that the bearish extreme level is pretty far away. So we've just gone below the zero line, and those significant bearish extremes come when commercials are at almost 100,000 contracts net short level, large speculators roughly 100,000 contracts net long level. So that would be a unquestionable bearish extreme, and of course that is definitely not the case right now. So I think in the medium to long term we can expect even higher prices in the cocoa market. Our next analysis, we'll move on to large speculators COT extreme, and we'll start with the coffee, where we have a all-time COT extreme in large speculators. So that's huge. Of course, this is a bullish COT extreme situation. Very significant bullish extreme in this market, and if you look at the chart of coffee, then we shouldn't be surprised. We can expect prices to start rising even higher from these levels. So pretty obvious picture here. Not much I can add. Of course, the only important opinion that you have to be careful, these extremes may be in the market for many weeks. They may even widen to even greater levels before the price actually turns. So I think this is important to emphasize, as I always do. Cocoa, we spoke about it, so we're just going to jump over to the copper market. We have a 37 report extreme, which, well, not that significant, but nevertheless, let's just have a look at the market. Copper You can see that extreme over here. It's an unquestionable bearish extreme, as you may see on the chart. So commercials are at roughly 60,000 contracts net short, while large speculators are about 60,000 contracts net long level. And as you may see, since basically early last year, so 2016, prices have gone much higher, and we may expect this to correct, and we could see lower prices coming in the near future. Soybean meal, let's move on and have a look at that. Although it's only a 27 report extreme, well, let's just analyze this market and see whether there's anything important. Well, yeah, 27 report extreme means basically no extreme. So how about looking at commercials? Feeder cattle, there we go. Let's just have a look at this market, because we have a all-time COT extreme over here. Commercials have never been as net short as they are right now, meaning about 5,000 contracts net short level. Of course, you can see on small speculators that they're more or less correlating with the commercials. But still, that is an extreme, and you can expect prices to sort of top out at these levels. Technically speaking, we're definitely at important levels, as you may see, and we should be positioning ourselves according to this COT signal. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.